So good morning. We're happy to be here. I'm Barry Schneider, and I'm going to talk about ownership and the deep human emotion that it stirs. It's a primal, very fundamental feeling of engagement. People care way more about things they own than things they don't. If you own Coca-Cola stock, why would you ever drink Pepsi? If you own Sears, why would you ever shop at their competitor? So when you look around the room, you think about the tens of billions of dollars that are spent in marketing to change attitudes, to measure behaviors, and to repitch to change attitudes again. And I think the Holy Grail, I think everybody would agree, the Holy Grail is to change behavior. And we believe that ownership is the first behavioral currency. So CSOP, Customer Stock Ownership Plan, gives companies the ability to confer ownership to their consumers, to their constituents, through easy ways to buy online, from their Facebook page, website, to perhaps provide rewards, allow people to use loyalty points to buy stock. The important part is to create owners. So we talk about ownership changing behavior, and there's no more on-point quote than Lawrence Summers. In the history of the world, no one's ever washed a rental car. So let's look at the numbers. This is Bain data measuring across 11 verticals consumers' behavior when they are direct owners of the stock as opposed to when they are not. And it's profound. Consumers that are owners spend 54% more. Their share wall is up a third. The price elasticity is 26%. 10 years up 10%. Frequency of visits 68%. And referrals twice as many. So let's look at how many people really own stock today and what the opportunity is in this room. 18% of Americans own stock directly. And that's shameful to begin with. 18%. 56% own in 401ks. But today we have a deep disenfranchisement. The middle class, and we got to hear about that in spades the last couple of weeks, but the middle class feels like they're ignored, like they're getting slowly assassinated. Nobody cares about their voice. Nobody's listening. And so the great thing about this platform, the great thing about companies conferring ownership is they show that you do care. You care about your constituents. And the way that you can make it easier for them to become owners is to remove the barriers that exist today for most Americans. And those barriers are, it's very complex to own stock. It's high minimums. It's high fees. Research says people want to invest $50 a month in 5 brands. So basically $250 a month, $3,000 a year. And actually 48% of Americans say they'd like to buy stock directly from the companies they do business with online. Imagine the brand ambassadors, imagine the Uber ambassadors that you get when people that intersect with your brands actually own your stock. We have some wonderful focus group research where you see people where logically they say, I'm only investing $25, but I almost feel like it would be against my own interests if I used a competitive brand. Hence the higher elasticity, higher share of wallet. So this is very disruptive because what we do is we remove the barriers. We allow people to buy stock directly from companies, to invest as little as $10, and to pay no fees ever. And what does that mean for participating companies? There's a chance to create a deeper engagement, to tap into that primal emotion. There's the opportunity to communicate on the platform, both social and offline. And there's the ability to, in a very powerful way, grab the hearts of your consumers and consumers-to-be by simply allowing them to own you. So we often get the question, okay, we get it. But what happens if our stock price goes down? Are we going to actually have people less loyal? We get the loyalizing effect of ownership, but does it work opposite? And so we at first said anecdotally, look, all of us in this room know the power of ownership. We use it all the time. I mean, who here is not involved with stock options or some equity-based comp? I mean, that's been used for years. And we know what happens when the stock price goes down. People are fans. If they believe in your company, they engage more. We went ahead and actually did the research, and the research showed exactly that. It showed that when consumers own stock in a company and that company's stock goes down, they actually spend more, they refer more, they are visiting websites and stores more frequently. It actually shows that what should be the case, right? That your consumers are 9 times more apt to be upset when there's a degradation in the quality of product and service than if the stock price goes down. And as shareholders, they're great because 2 times the people buy on a dip as opposed to selling. One of the really exciting things for our company is we worked with the SEC for the last year and finally got their approval to provide our platform for IPOs, companies going public, not just public companies. And we're going to be doing our first IPO, market willing, this month. But actually there was a predecessor company that did this in the offline world before you could do this electronically easily for consumers. And that was Boston Beer, the Sam Adams folks. And amazingly, in 1995, on an IPO led by Goldman Sachs, the founder CEO reserved 30% of his stock for his consumers. And he sent out notices on his 6-packs of beer. And I actually met with him a couple months ago, and he was telling me that he had a room full of checks, physical checks, 3x what he really needed, had to send it back a bunch of money, funded 30% of his company from his consumers. The market in 96, 97 went down in general. His stock went down 50%. And he said, Barry, the fact that I had consumers owning my stock is what saved my company. They continued to buy as consumers. They continued to hold my stock. And now, 17 years later, 30% of that initial shareholder group still own their stock from 1995. I mean, that's amazing. In today's high-frequency trading world where people hold stock for, I think, 22 seconds. So here's a platform, and we launched with Fifth Pacific, the parent company to Juicy Couture, Kate Spade, Lucky Jeans, and on their Facebook page or website, you can actually go to any of those Facebook pages or websites and get into this app yourself. It's amazing. And this is kind of the iconic way for people to now buy. We're looking to create tens of millions of Americans to become owners, where they invest small sums every single month for 10, 15, 20 years, and give you as owners, as companies, brands, the ability to communicate with them at a whole different level. And as you can see, there's nothing here about stock price. It's about investing a small amount of money, and we take care of it on the back end with fractional shares. It took us 2 months to get the SEC to approve a Facebook widget. It was so amazing. We're with 17 people from the Securities and Exchange Commission. Huge, huge meeting for us to be able to get them to approve IPOs, at least for our little company. And the first question that came up was, well, gee, 50 Cent tweeted on a penny stock and the stock went through the roof. And what I really wanted to say, Chris was with me, was, really? That's your concern? Really? 50 Cent tweeted? And luckily, Warren Buffett, the week before, had just invested $10 billion in Bank of America and announced it on CNBC. And so we just asked simply, are we going to censor CNBC and TV? But imagine the conversations that your consumers can have. Imagine how they feel when they're given the opportunity. 18% owning today as more people get the opportunity to become owners. And imagine how they not only become more rabid in terms of their support, but also online in promoting and defending your brand. You can create an army. Here's the activity feed of that previous widget comment that we showed, all across the world. And here's a way on our app. Now, since May when we launched, we found that on average, people are checking their My Accounts page every 12 days. So we try and advise our brands to come up with a programmatic approach to keep changing their messaging on this My Account page, because this is an area that your consumer owners are going to come to. So we give you 3 lines here to talk about new products, new store openings, promotions, etc. So I want to turn over the social side of our business to Chris Kelly.
Hi folks, I saw the social revolution up close. I joined Facebook in 2005 when it was about 25 people and all my friends made fun of me for betting on a 21-year-old kid. It worked out all right. I left in 2009 to seek political office, which didn't work out, but now I get the opportunity to invest in and explain companies like Loyal3 that are changing financial markets radically. But what they're doing most importantly for you as marketers is to enhance your social strategy, to transition it from getting likes and getting those engagement and getting followers to something that actually changes active behavior. So the questions that you have, what is my social media strategy? How do I engage customers that are talking about my brand? And you're having fantastic examples of how to do that effectively. But the question that you want to ask yourself as you do all this is, who really owns my brand at the end? And the answer to that is the consumer. They control what gets said about you. And your job is to convince them to talk about you in a positive way. So right now, social metrics are limited. It's likes, it's followers, it's sort of you, and you get sentiment expressed. And more analytical tools are being developed. But the problem is that you get a lot of fans, and you don't necessarily know what that's going to mean over time for the development of your brand and the stories that you're going to tell. What you can do through the Loyal3 platform is to transform that into actual ownership of the company, to get those metrics that we've seen through surveys and that we're seeing in operation now that we've launched with Fifth and Pacific, and now that we'll launch shortly with our first IPO. And the follow-on brands that are coming. We're getting great activity on the platform right now, and we're excited to see that build up. Ownership is the ultimate like. It is the monetization of social media. So you can populate social media with brand ambassadors who are actual owners of your companies. They will become your marketing strategy. Especially look at those referral numbers. I mean, doubling referral rates for actual owners. This loyalty effective ownership is what can help transform behavior, which ultimately, of course, is your goal. I'm going to hand it back to Barry for how ownership affects you.
So we like to believe that we can transform the capital markets. We can turn, from the consumer's perspective, the whole market upside down. Because today, consumers are being blocked because of high fees. And we, through partnerships with brands, can allow consumers to get back involved without having to meet any of those barriers of high cost or fees. For the brands, we can create some metrics that are really important. The first thing is we can provide, in a very short period of time, over $60 billion of new capital formation, new liquidity to create jobs, to create innovation. And we look at that with 20 million people coming on the platform, spending $50 a month, 5 brands, 12 months, that's $60 billion. And the interesting part, 82% of that, or $49 billion, will be new capital formation. In an election year, that rocks. Importantly, for everyone in this room, the more your budget gets cut, the more people say, well, brand spend, what's the efficacy of brand spend? Imagine as you have more and more consumers that are owners, when all of a sudden now the consumers are buying the stock and the way people feel about your brand becomes more attuned to your equity value. And I think that's really important. How often do you have Wall Street putting a company in disfavor? The company has rabid consumers that love them, but the street doesn't. And that disalignment just seems very wrong. And the type of metrics that we can produce in terms of the consumer behavior changing with ownership, in terms of what they're doing socially, we can develop these different dashboards and give you the information very timely. These are people now that you don't have to worry about providing feedback. They want to. They want to be more engaged. So really, we can sum up this whole exciting notion of ownership changing behavior in three parting shots. The first is that ownership really is the world's first behavioral currency. Think about what you do every single day in trying to drive a change in the attitude to your brands. And imagine if you can have that become a change in the behavior of people toward your brand. The second is ownership really is the ultimate like. And as we look at social and we look to monetize the social investment, creating more owners that react with your brand in the social sphere is going to be better in terms of finding people that not only advocate, but also promote and defend, which I think is really important. And lastly, this seems foreign, but it's just such the right-on notion, and all the research shows this. Instead of really spending all this money trying to own your customers, the simplest way to get loyalty is to allow them to own you. Thank you.